Hi, I'm Dan Danford, and we're doing another episode of Money Made Easy for dadsdivorce.com. We have a question from a viewer of the website. My son wants to purchase a car and have me co-sign for it. I have an average credit score, so I don't think I would be rejected as a co-signer. But will the fact that I am co-signing for my son affect my credit score in any way? Sure, the co-signed loan ends up being a liability on your credit record. I think any parent with adult children has probably faced this issue at some point in time. The truth of the matter is, even if our adult children have credit scores of their own, they typically aren't as good as their parents, and so the parents' help by co-signing will probably reduce the interest rate on their note. I know that's been the situation when I've helped my kids, and I assume that's part of the reason why your son would like you to co-sign on that note as well. Makes perfectly good sense as long as you understand kind of the rules. One of the rules is that as far as the credit rating services are concerned, that is your loan. Okay? Now, in all likelihood, what will happen is that your son will make the payment for the 3 years or 4 years, pay off the loan, there'll never be an issue, and everything's fine. But for the entire term of that loan, the 3 or 4 years, it will show up on your credit report as well. Okay? Now, as long as he makes the payments on time, that's not going to affect your credit score, but what it might affect is your ability to borrow again. Okay? When lenders look at somebody's personal financial situation, one of the things they look at is how much money maximum they should be able to borrow. So let's say in your situation, they look at your situation and they say, hey, the maximum you'll be able to borrow is $30,000. Well, then they look at the outstanding loans and they'll say, well, he's already borrowed $20,000, so there's only $10,000 of credit available. If you use up a chunk of that $10,000 by co-signing a note for your son, then that could be an issue if you go to borrow money later on. You know, I've sometimes been surprised when I've sat down with kids or I went to do a credit report or something for me, and a note will show up on there and I'll say, I don't remember borrowing money from them. And then I'll think back and say, you know what, I did co-sign on that note for my kids a couple of years ago and they still have an outstanding balance. So I don't think it's a big issue. I just think you ought to be aware of that. Now, like I'd tell anybody, any place, anytime you loan money to somebody, anytime you co-sign for somebody, it's a business transaction, okay? I love my kids a lot, but if I loan them money, I expect them to pay it back. Not just because I need the money, but because it's the right thing for them to do, and I want them to get in the habit of doing the right things. If 2 years into the loan, they miss payments, or we find out that their car isn't insured, or they're involved in some kind of lawsuit or something, and that car gets drawn into it, well, as a co-signer, you are automatically drawn into it. And if the bank can't collect what they are owed from your child, they will come after you. So if your child doesn't do what they're supposed to do, then you'll start getting the telephone calls from the credit agencies, and you'll start having the collectors bother you for the money. So basically, don't lend money to anybody, even co-sign on notes, unless you're ready to make those payments if they default. Now that sounds a little harsh, but that really is the way it works in the banking world, is that, you know, the reason why you co-signed is you guaranteed that note. You basically said if this person doesn't make their payments, then we're going to expect you to make the payments. And I think you should assume right from the beginning that if things go bad, you're going to be responsible. You don't want to get to the point where somebody's garnishing your wages. You don't want to get to the point where you're having to make payments on a loan that somebody else defaulted on. All those things are bad things. So I think you should treat any loan that you co-sign for as if it is your own loan. And you should expect to pay it off unless it gets taken care of before. And if you can't live with those terms, I mean, if you can't sit down and say, well, if the worst happens, I'm going to be responsible. If that's not a comfortable feeling for you, then you shouldn't co-sign the loan. Plain and simple. You should treat it as if it's going to be your loan unless you're comfortable that the person you're co-signing for is going to take care of their obligations like they should. So no, I don't think it'll hurt your credit report as long as they make the payments. It may affect your availability of credit. And in all cases, you should assume that the worst is going to happen. And if that makes you uncomfortable, then do not co-sign the loan, whoever it is. Okay, that's another episode of Money Made Easy for Dad's Divorce. We'll see you again next week.